First up, we're going to kick things off with a sector overview from Tribeca Investment Partners, Guy Keller. So Guy is the portfolio manager for the Tribeca Nuclear Energy Opportunities Strategy, which invests in the equity and debt of companies involved in the nuclear energy industry, with a key focus on the uranium sector. Good morning, Guy.
Hi, Jane. Thanks for having me, and hello everybody that has dialed in today, and we'll be watching this later. So yes, as Jane said, I run the Nuclear Energy Opportunities Fund. We launched in 2018 after a deep dive into the sector, and we launched in 2018. There's been some pretty good returns since those. I think we've done just over 400% net of fees since inception. And most of that was through 2020 and 2021. I think we are certainly at the beginning of the next cycle. The great thing about uranium is that it does run in multi-year cycles, and that's largely because utilities, unlike any other commodity, generally or still do engage in multi-year contracts, of which they've been absent for a decade. When you look at just the thematics, I mean, from our global natural resources perspective, we look at obviously the thematic of decarbonisation, and we take that a little bit further for nuclear and say it's decarbonisation via electrification. Now, obviously, it's no good. I mean, it's fantastic having a battery electric vehicle, but if you're plugging it into coal-fired power, you're not actually solving a decarbonisation problem. When this is actually a global natural resources slide, not just tailored for a uranium crowd, and we're looking at the commodities required for decarbonisation, and uranium is obviously up there on the electrification angle. The more relevant driver for nuclear, however, whilst decarbonisation has been a driver, the more relevant driver has been energy security, and more importantly, government changes to policy that have brought forward commercial decisions, and most of that is the nuclear nations. There's 32 odd nations currently producing nuclear electricity. Almost all of those have now made decisions to keep their nuclear fleets running, to extend the operational lives of those nuclear reactors, to build new gigawatt scale technologies, and also to invest in the new technology around small modular reactors and micro reactors, as to how to bring those to their grids. And that, when you look at the demand equation, nuclear uranium is actually one of the easiest commodities to model demand, because most of the existing demand is already built, and as I just alluded to, that existing demand, which was starting to naturally decay in the last over the last decade, has now snapped back as those government interventions have caused those reactors to extend their lives. So you can model it out, 10, 15 years fairly easily. And we're also in the middle of the biggest reactor build program we've seen in decades. So there's 61 odd reactors, which, just as an aside, that 61 odd reactors are coming on in the next 5 to 6 years. That they will require 30 odd million pounds of uranium. Put that in perspective, that's more than NextGen's Arrow deposit, and what they're going to be doing when they come into production later in the decade. So we're starting this thesis after a decade of chronic underinvestment and low prices that have forced supply out of the market. We're starting this thesis with a deficit that has lasted a decade, and we're adding to it new demand that will be there every year for 60 years. So it's very different to something like lithium, where global economic cycles might cause some uncertainty as to whether battery electric vehicle uptake will continue. It then causes uncertainty as to whether future demand around gigafactories, whether they're going to be built. We're already seeing some of those headlines. So again, your demand is flaky. It's governments pushing nuclear to stay around, in a market that we're suddenly expecting supply to magically appear. Now, this is a really wonderful slide, and I want to focus a little bit on this. This is the World Nuclear Association, so it's not a bank analyst, putting a model out. The World Nuclear Association, they have a number of subcommittees across both supply and demand, where they're talking to almost every country that's involved in nuclear, or they are talking to every country that's involved in nuclear, as well as some that want to be, and they're looking at potential supply. You can see here that just to meet the lower scenario, so they put out 3 scenarios. The reference scenario is the most likely, and then they give you a band on lower and upper. You can see here that the way the World Nuclear Association looks at the world, they're only seeing enough supply response to meet the lower demand scenario. The gap between those colourful bars at the bottom and the reference line, they're calling unspecified supply. So, anybody that's spent any time around the mining sector, regardless of commodities, it doesn't have to be uranium, knows that it's hard enough keeping existing mines running in the current environment. It's hard restarting idle capacity, and we've already seen some news around delays of idle capacity coming to market, which the market assumed was coming. It's really, really hard to develop a mine that's already in development or starting development. And the planned and prospective, a lot of things need to go right for those projects to come to market. And then, assuming we can achieve all of that, we still have to bring the unspecified supply into the market to make that reference scenario. Now, you're going to hear from 3 companies here today who form part of that unspecified supply. So, they're not yet considered by the WNA. So, these guys have got to bring their projects to market as well to bring us anywhere near what we need to achieve. So there's a lot to do. And as I said, a lot that needs to go right because reactors are going to continue to get built. And it's now up to the mining sector to find that ability to respond. We're in a and again, this just sort of brings it back to the reality here. Price, as well as good as that is, and here we are up around $70. And when I started looking at this thesis sort of 6 or 7 years ago, we're trading at $18. There was a school of thought that we'd hit $60 or $70 and there'd be a wall of supply coming to meet that demand, and it hasn't happened because price is not the only thing that we need to solve here. We bring it back, and we've only got a short period of time, so I'm going to skip through a whole bunch of these things. But you come back to the investment, to the checklist that all of these projects have to do. Price is wonderful because it gets you looking like you're going to give a return to investors. But as I said, there's a whole bunch of other things: jurisdiction, community, indigenous relations, finding the money. Do you have the right management team? So whilst we are certainly going to be ticking a lot of those boxes with a lot of these projects looking to come to market, it's not going to magically solve itself overnight. And as to have we done enough at $70? Cost inflation across the sector of all commodities and all projects and would argue that $70 is probably not high enough. I tend to throw in $85 now as to a price where I think you'll start to see more projects think about final investment decisions, but remembering they need to tick all these boxes. Now, I think I'm pretty much up to the 10 minutes already, and you're not here to hear me, you're here to hear from these other 3 companies. So I'll stop there and allow us to keep moving forward, if that's okay.
Yeah, not a problem. Thank you for that, Guy. I mean, I think I might actually open this up to a panel discussion now. So let me just bring, if everyone can join us back on the panel discussion. So gentlemen, and Pete, I think I might hand over to you first up for this one. So we've seen a lot of changes in the sentiment towards the uranium sector and nuclear energy over the past year. Do you want to just elaborate on what you think has driven this?
Yeah, absolutely, Jane. And just before we get off, thanks again, Jane, for setting this up. It's great to be talking today. Most of the points to answer that question, I'm going to reiterate Guy's comments there, but to me, fundamentally, the change in sentiment towards nuclear is being driven by these global targets set for carbon emission reductions. Now, this is obviously a response to managing climate change. So we have to remember globally still, we're burning fossil fuels. Around 80% of our world energy demands is coming from burning fossil fuels. And this is a phenomenal number. We've seen some fantastic advances in renewables and energy storage technologies, but these don't come without some significant challenges. Now, whether that's technical, whether that's geographical, or the significant amounts of investment which are needed to support the implementation of those. So whilst the world tries to meet these emissions targets and integrates renewables, it's fundamental to policymakers that countries can continue to provide safe, reliable baseload power. I guess, look, if you're a policymaker, and this really comes back to Guy's comments about energy security, the last thing you can afford is for your constituents to hit the light switch and be subject to rolling blackouts or brownouts. You know, that it doesn't put you in a good light, pardon the pun. And look, that's why we're seeing numerous governments around the world really focusing on nuclear as being a fundamental element or component to their energy mix. And we're seeing that in policy changes, whether that be the well-advertised US supports for supporting the nuclear industry, or perhaps the more subtle things coming out of Europe. Sweden this year in June, for example, changed their wording of their energy policy. They were 100% renewable energy by 2045. This got changed to 100% fossil-free by 2045. And this is examples of setting their policies to accommodate and to integrate nuclear as a stable part of their power supply. Look, with regards to sentiment, I guess the additional mainstream media coverage that we're seeing, the coverage on nuclear technologies, the advances with SMRs, the advocacy of people like Bill Gates talking about nuclear and the viability and the place that it has moving forward is again building on that sentiment. And with that additional focus on nuclear, we see a look at where are these supplies coming from. Guy's been talking about the deficits for several years now. This is very real, and people are now starting to look at that, and you add on the other geopolitical instabilities, and it's an even more compelling narrative. So, look, from my side, we've had a seriously unincentivized uranium exploration business for many years now. There's not been a lot of activities done for a long time. There's been minimal new discoveries. Yeah, sure, there's a reasonable amount of multiple projects around. A lot of those were last looked at 10 or 15 years ago. So people are thinking, well, look at CapEx, look at OpEx increases in that time frame. And quite clearly, we need a significant price shift in uranium, and we need some new discoveries. So the renewed sentiment for exploration is there, and it's very real for good deposits in good jurisdictions. Does that answer?
Yeah. Guy, I'm going to actually just hand back to you for this one. So, I mean, can you walk us through what you're thinking about valuation in this particular space? And also, how do you see uranium playing a position in the portfolio of investment companies at the moment?
The one thing about valuation is that every analyst is going to be wrong, and every analyst is going to be behind and chasing their tail, because that's exactly what happened last cycle. And this sector, when the price moves, it moves extraordinarily quickly, and nobody's ever brave enough to look back at the last cycle and say, why can't I throw a $100 uranium price into my models, or a $140 uranium price? Where does it stop? So I hear, and the other thing as well is most of the sector's not producing. So it's, you can't sort of look back on your normal multiples that analysts like to feel comfort in. So they want to look at price to NAV or EV to resource. I actually personally hate EV to resource, because it means a company can go and stack a whole bunch of projects that are never going to get developed and say, look at me, I'm trading cheap on an EV to resource basis. Compared to somebody else who's almost producing. So yeah, as I said, if a brave analyst goes and throws an 85, 90 or $100 price in, then valuation's not expensive on some of these names. Also, there's a scarcity, right? It's not like, there's 1,000, it's not like 1,000 lithium wannabes coming to the market. There's just not that much out there at the moment that can move forward in this sector. So, that scarcity premium sits. How it sits in the portfolios, I mean, the interesting thing here in the ASX is you've now got 4 companies in the small ordinaries index. That's almost 2.5% of that index. And so there's a lot of small cap eyeballs that now are forced to look at that because, you know, June last year there was zero. So it's not like lithium where a company comes in of the small ords and be replaced by another one. So there's company specific. This is a whole sector that's just appeared. And to put that in perspective, just to get index weight, you know, $100 million small cap mandate needs to hold, you know, a couple $1 million worth of stock. You know, you multiply that to $1 billion small cap fund, they need to hold $20 million of those 4 companies just to be index weight. And if they then choose to take an overweight position, then they're adding more. So you're seeing a lot more of that buying come in now from those small cap and small ord sort of index guys that you didn't see before. Before it was just ETFs, for example. So, you know, it's reaching a broader audience. And of course, the next question people ask when they've done the work on those 4 companies is they say, what's not in the index that may get in? Or what else is there that I might go and throw into my PA portfolio because I'm looking at the space suddenly. So, you know, as a result of that, you do get a lot more interest. And certainly I'm seeing much more inbound from both investors into my fund as well as peers in the sector who say, you know, what do I need to look at here and how do I get involved?
Perfect. John, I'm going to actually hand this one to you. So considering the projected growth in nuclear capacity, which was outlined in the World Nuclear Association's Fuel Report, how can international collaboration be fostered to ensure a harmonized approach towards nuclear safety, security, especially in the midst of all the geopolitical tensions?
Yeah, and you know, Russia, Ukraine is, you know, a really important factor here. You'll notice that there's been massive sanctions on all sorts of Russian things, but one thing that hasn't been sanctioned is uranium yet, because the West just cannot live without that uranium supply for now. But they want to, and you know, it's to be expected that, you know, the Western nuclear leaders, being the EU and the US, look to like-minded supply countries like Australia to bulletproof their security supply, their nuclear value chain. Yeah, that's with uranium. You've obviously still got an issue with conversion and enrichment, because again, there's a lot of that capacity sits in the east. But over the next cycles, I do expect that you'll see a concerted effort to sort of westernize a lot of that value chain. You know, in a way that the US has sort of done with critical minerals and investment into Australia in the critical mineral sector. I expect you'll see that in uranium. Uranium itself is not classed as a critical mineral in the US. It's an energy fuel. But in Australia, we are actually talking, and the Minerals Council just put in a submission to include uranium into the critical minerals list.
Thank you, Murray. I'm going to hand over to you now. So given the notable rise in uranium prices and some of the best monthly results for uranium mining stocks we've seen in the last sort of 2 years, how do you feel that the financial sector is reacting to these developments, and what sort of investment trends surrounding uranium and nuclear energy?
Yeah, thanks, Jane. Very positive. You know, 2 years ago, I was ringing brokers that didn't want to take my call. In the last 3 weeks, they're all ringing me, including Guy. Aren't you, Guy? Yeah. So look, there's been an influx of calls because, you know, investors are realising that all the things that Guy's talked about, the math and supply demand issues, are causing, you know, creating an environment which is going to be fantastic for investment. So we're just getting a lot of calls coming in. Been taking and doing presentations on a regular basis because people are very much interested in uranium now.
Guy, do you have anything you want to add to that, given you're being thrown under the bus?
Yeah, look, I mean, it's been a good start to a sector recapitalization, right? I mean, you've got to remember that this sector is responsible for producing raw material that produces 10% of the world's electricity, and carries a massive burden of decarbonising that electricity. Yet the global market capitalisation fits inside Fortescue. So, you know, it's a tiny sector doing a big job with a bigger job to come. So, you know, as I said, it's a great start. We're still not on a number of stocks, still not anywhere near the September 21 highs that were put in place.
Mm.
So, it's only just begun. I mean, obviously past performance and everything else, but just the sentiment shift, as I keep saying, it's governments driving this and expecting supply will find its way to the market.
Guys, next question I'm going to actually open up to the panel as a whole. Pete, I might go to you first, but so how do you foresee the global sentiment towards nuclear energy affecting the pace at which these scenarios might unfold, especially with regards to achieving that net zero carbon emissions target?
Yeah, Jane, thanks. Look, I think we've sort of covered that already, but with regards to with regards to this unfolding, as I said, the political drive to position nuclear to assist with reaching those targets is forefront and paramount to this. And we can only see that pace, or I can only see, I should say, that pace being more embraced and being moved forward. I mean, we're all bullish, we're all excited about the sector at the moment. And that continuing narrative, as Guy mentioned, about all of the, or almost all of the current nuclear countries have committed to continuing their nuclear fleets. Again, that sentiment is being pushed and being kept forward. So only increasing as we strive towards meeting our carbon objectives would be my commentary on that, Jane.
Anybody else have anything to add there?
Yeah, Jane, I mean, I think it's interesting to see what's happening in Australia. Now, Australia, even if we build reactors, we won't materially impact the uranium supply globally. But the need to move the Australian collective psyche away from Rainbow Warrior and Chernobyl to net zero, net zero nuclear is something that, it's just blasted onto the scene in the last 12 months. And that's reflective of similar changes in Canada and Europe. In Europe, the Greens now agree that nuclear's green, and Canadian Greens now think nuclear's green. Unfortunately, our Greens have got a bit of a way to go. But I think this is unfortunately where Australia is a bit behind the rest of the world. But thankfully, the discussion is here, and forums like this are fantastic because, who would have thought, the uranium sector could pull a few hundred investors on a call only 12 months ago. A lot of excitement.
Murray, anything from you or?
No, Jane, I'm in the interest of time. I want to have my 10 minutes of presentation to about uranium.
Okay, wonderful. Guy, I'm going to hand back to you for this one. So the World Nuclear Association estimates a doubling of uranium demand by 2040, which we also saw in your presentation, with small modular reactors contributing to this increase by 2030. So how are different stakeholders preparing to meet this demand, especially in the context of long-term uranium contracting?
The simple answer is most of them are still relatively asleep at the wheel. There has been an increase in utility contracting, and year to date we're back to levels that we were seeing pre-Fukushima. But we're still not anywhere near replacement rate contracting. So, the utilities are engaging in contracts at a level that's less than what they're consuming every year. The only stakeholder I think that's ahead of the game at the moment is China. And they were late to the cycle last time, and they were responsible for that post-GFC rally again in the prices. We've seen a lot of press about Kazatomprom putting up their 2025 guidance back to their subsoil use agreements. The market says, oh my God, here's all that supply. What they're failing to recognize is that the lion's share of that is going straight to China. And that's one thing the WNA don't model. They model what reactors are you building, do you have, you're planning to build, and maybe in the pipeline. China's not thinking that way. They're thinking we're going to 300 gigawatts, so that's going to require 150 million pounds of uranium per year. We'll take it all now, and we're thinking way ahead of that. But as I said, it is reassuring to see that the utilities are coming back. We keep hearing that there's more interest coming into the end of this year, but they've got a lot of work to do. And it was very brave of the WNA to finally have a stab at putting the small modular reactor demand into their equations. And I suspect it will probably be like 2016, 15, 16, when we're all trying to model lithium demand. They're going to be wrong because they'll be too low. Because I think what we're going to find is that small modular reactors are coming. regardless of what naysayers are talking about. Yes, there's a generation 4+ that needs to go through more regulatory hoops, but the first wave is existing technology, and that will be rolled out very quickly. So they've got a lot of work to do, and as I said, these cycles are multi-year cycles. Utilities don't move fast, but once they decide they need to contract, it takes them multiple years to put those into place.
Well, Guy, just further to that then, so the extension of operating life for existing reactors has been seen as a positive move. However, obviously, of course, there's potential challenges tied to aging infrastructure. So what measures, in your opinion, do you think should be taken to ensure the continued safe operation of these aging reactors? And how can the lessons learned be applied to newer advanced reactor designs?
Yeah, look, I mean, with respect to reactors, when they started being built in the 50s, 60s, 70s, nobody knew how long they would last. So some bright spark said, why don't we put 40 years on it? And that seemed to be something that was globally taken up. What the important thing to remember is that whilst the concrete and everything else, the structure of the reactor is the biggest cost and has proven to be robust. And we already have reactors that have been 60 years and some looking for 80 years. And there is very good engineering advice. And remember, they're not looking at this lightly. It's a nuclear reactor, so there's a lot of scrutiny as to how long they could last 100. But we're not looking at 40 or 50-year reactors. They don't have the same components that they had when they were built. Every year when there's maintenance, there's big refurb programs. So it's not looking back at like a Star Trek episode where there's levers and steam. It's state-of-the-art technology running these reactors now. So that's one thing to consider, and I think that gets a little bit lost. People sort of think back to Simpson-esque type things, saying, "Oh my God, we've got this creaky old thing that's running." Sure, and coal-fired power plants, that might be the case, but nuclear, and so. And going forward, there's been a huge amount of safety redundancies, and the small modular reactors have taken the learnings of 60 years of gigawatt scale and put that in. So I mean, and again, as I said, there's been 3 high-profile incidents over that time, and the sector has learned from that and has probably, got some of the highest safety standards in the world.
Thanks, Guy. My next question, Murray, I might go to you for this one. So the primary production of uranium continues to be the major source for nuclear fuel, with secondary supplies projected to diminish over time. So how can the nuclear industry ensure that reliable and diversified supply of nuclear fuel? And are there any innovative strategies or technologies on the horizon to address potential supply constraints?
Interesting question, Jane. Really, whether the nuclear industry needs to do it, but the industry is going to need higher uranium prices, as Guy said. So you would need incentivization to get us into production. And the world has got, a defined resource for finite resources now, but of course we're exploring and finding. And if you refer to us, Elevate, 4 discoveries in the last 4 years. But what we need to do is we need to be innovative in our approach to mining, lower the cost structure, to be able to mine lower grade materials that we have been able to mine in the past. And that's where Elevate comes in again. This is a bit of a plug. I'm really enjoying this. We've developed this upgrade process which lowers the cost base for superficial style ores that we see in the Namibian desert as behind me. So I think the supply demand has got to push the price up, the uranium underlying commodity price, uranium price up. And then we need to be innovative as an industry to be able to develop projects that either have got metallurgical problems, mining problems. Geopolitical is a little bit more complex, but the innovative nature of mining and processing, I think, is what we need to do, and that's what we're at the forefront of.
Any other comments from the panel on that?
I might just add a couple of things there, Jane. Specifically looking at the Athabasca Basin, which is relevant to basin energy here, there's a couple of technologies or mining methods which are being deployed, which are a little bit out of the ordinary. So we think of the Athabasca Basin, we think of large underground operations. Elsewhere in the world, we think of open pit. We look at ISR opportunities, which have traditionally been hosting these sandstone, quite porous, flat-lying deposits. It's great to note that Denison Mines have recently successfully trialled ISR mining methods in the Athabasca Basin as a different method of extraction for a lower cost technique in this different part of the world. So innovation of different techniques and technologies in the basin are being seen. And the other worthwhile comment is that the Athabasca is host to some of the largest and highest grade deposits, but also there's some of the smaller deposits, also high grade, very valuable, with their own mining challenges. The work that Orano are doing with Sabre is also pretty innovative. So this is using a hydraulic downhole drilling method, which mines the ore using high water pressure and then pumps it back out using high pressured air. So ideal for these compact, low footprint mines, which traditional methods would probably struggle to get off the ground, but again, opens up these new opportunities of potentially significant uranium supplies up in the Athabasca and potentially elsewhere in the world. So, good innovations.
Wonderful. Look, I think just to wrap things up, we're running slightly over, but so in light of the projected long-term increased demand and potential uranium supply crunch, what strategies are being put in place to support a sustained bull market in uranium? Jono, I might hand over to you first up.
Yeah, sure, Jane. Look, I think the guys have mentioned it twice or three times as incentive pricing. So, you know, there needs to be a huge amount more uranium coming to the market, and at low prices, it doesn't work, and the demand won't come. So the downside of not having the uranium and not having reactors online, well, that's not an option. So the only option is for pricing to meet the requirements to get new demand into the market. So while there will be ups and downs, and actually also having some pretty big players exit the spot market, which reduces liquidity in spot and can make things a lot more volatile, there's really no other trend but up with volatility. But it's got to go up.
Wonderful. Guy, do you have anything on that as well?
Oh, look, I mean, I think the one thing we have to remember when we talk about bull market is, for coal and natural gas, the price of coal and natural gas, is 80 to 95% of the cost of generating that electricity. For a nuclear power plant, when you look at that cost, the uranium itself is sub 10%. And when you then throw in the fuel cycle, it's, with fuel cycle prices here, it's maybe closer to 20%. So you turn around, you say, $20, $40, $80, $150. Is it making nuclear power plants uncommercial? And the answer is, they don't want to be paying more, but they can continue to pay more, and they had in the last cycle. When you then throw in the idea of carbon-free baseload electricity, you then look at the difference in what it can provide to the grid, and in replacing coal from the grid. I turn around again and say this bull market will continue for as long as the nuclear power plants continue to play a key role. So that constraint that people often turn to, well, it's going to get to a price where nuclear is not competitive. That's not an issue. So a little bit slightly different way of answering that question, but just important to remember that it's not that relevant to the provision of nuclear electricity.
Wonderful. Anything from you, Murray, or?
No, Jane, I'm ready to go.
Okay. Well, gentlemen, thank you for joining me for the panel discussion. Guy, great presentation. I'd also like to note that Guy Keller will be hosting a uranium-focused conference at the Adelaide Convention Centre on the 15th and 16th of November.
Yes, Global Uranium Conference. Yep. So, and I think the website is globaluraniumconference.com. Second year we're running it this year with the support of the Mineral Council of Australia. So it's going to be an even bigger event than last year, with basically every ASX listed uranium opportunity will be there, as well as a bunch of key offshore people as well. So it's looking to be a really good time to host a conference like that.
Wonderful. If you do have any further questions for Guy or for the panel, please reach out via the contact details on the bottom of the ASX releases, or alternatively to info@janemorganmanagement.com.au.